what's his name? Egon von Greiser, or Greyers, 42-year market veteran, spoke with King World News about the coming $1.4 trillion derivatives meltdown in what he calls $11,000 gold. This is what he had to say in this conversation. So this guy, Egon, says, Eric, every day we get reminders that hyperinflation is on its way. The Congressional Budget Office now estimates that the U.S. government debt will rise by $10 trillion to $27 trillion total by 2024. So, when I look at that and see the math that's already happened, I think he's being very kind in that it'll take until 2024. I don't see that it'll take that long. My calculations say right around the year 2019, maybe 2020, we'll have that type of additional trillions of dollars in debt. From 2008 till present, or even last year technically, so 5 years later, we took $9 trillion and went to 17, now $18 trillion. So we've doubled it in 5 years. If you just forget the doubling factor, if you just say, well, let's just add another $8 or $9 trillion to the debt right now, which is 18 trillion, you've got, 26-ish trillion dollars in the same amount of time, which would be the year 2019 or 2020. Not that really that matters too much. I mean, we're talking incredible amounts of debt that just cannot be serviced. So he says this, of course, means that deficits will escalate and money printing likewise, because the U.S. running chronic deficits. No one will buy the treasury debt. This means it all needs to be monetized and, or, in other words, bought by the Fed. They print it, and then they're the ones buying it back. So you have to ask yourself, well, what are they buying it back with? What money source is the Fed buying back our treasury debt with? Because when the treasuries get auctioned off, let's say, $100 billion worth, the Fed has to print $100 billion of cash, and whoever buys the treasury for $100 billion treasuries, right, they are, in a sense, going to get payments now, interest payments, for giving us $100 billion. But really, the Federal Reserve is just printing it and saying, here's your $100 billion. We had a successful auction. They bought it. Have a nice day. So if the Federal Reserve prints $100 billion for use in the government, but it also simultaneously needs a buyer of those bonds for the exact same amount, and it becomes the buyer, the question is, buying it, what money do they have in that type of amount especially to be buying it? Or are they just printing more money, i.e. when you hear, oh, the Fed's balance sheet has $4 trillion on it. Oh, it's balance sheet. So it just created money out of thin air to back the money out of thin air that it just created through the bonds. Makes perfect sense. So it says, in 1972, I came to the UK from Switzerland and was CFO of the United Kingdom's largest electric retailer, Dixons. I got my first options in the company at 1.3 pounds, currency, pounds. 3 years later, those options were worth 11 pence. They were down from 1.30 to 11 pence. And I bought my first house in the UK in 1973. A year after I bought my house, I paid 21% interest on my mortgage. 21% interest on a mortgage. That was for a short time, and then I paid about 18% for a long time. You ask yourself, how many people today could keep their homes if they had to pay 18% interest? Well, almost nobody is what he says, and he's right. Of course, at that time there was a major recession worldwide, but in addition the UK had a coal miners' strike and a 3-day work week. The other 2 days there was no electricity. So if you take Dixons, the electronics company, we had to sell electrical equipment such as televisions with candle lights. Of course, we couldn't show the people that they were working because there was no electricity. But you could see them, of course, in the candlelight. That led to a shortage of candles. We had to get our candles from Switzerland. In 1972, inflation in the UK was 8%, and in 1974 it was 16%. By 1980, it was 18%. We had a period of 8 years with inflation in the mid-teens. So what happened to the currency? In 1972, when I came to the UK, 1 pound gave you 10 Swiss francs. That was 1972. By 1978, you only got 3 Swiss francs for 1 pound. So the pound had declined by 2/3, devalued. Today you get only about 1.50. This tells you what happens to a weak currency in a badly managed economy. Luckily at that time the world wasn't dependent on computers. Today a 3-day work week would mean that the whole society would be paralyzed. The reason why I'm mentioning this very valuable experience is that the situation in the US and many other countries is very similar to the 1970s. And with exponentially rising debt levels in the US as well as many other countries over the next 10 years will guarantee hyperinflation. This will mean very high interest rates and collapsing currencies. Of course, this vicious cycle will lead to higher interest rates with lower tax revenues. We're already seeing the lower tax revenues. You already see that. I mean, that's obvious here in this country. They don't have enough working people to pick off of for tax revenues. Of course, they give us the bogus unemployment numbers to make you think that they're really out there, but you don't even have to look at another unemployment report the rest of your life. All you have to look at is what kind of deficits the government's, or in our case, our government's running, and the fact that this ballooning national debt, it literally is ballooning out of control. If we had the tax base, it would not balloon out of control. Sure, it continually goes up, but would it be ballooning out of control? No. So, circling back to the 1970s, in 1972 when I came to the UK, gold was $40 bucks. Over the next 8 years, gold went to $850, but it wasn't a straight ride. In December of 1974, gold was $204. In 1976, it was half that, $108. That was a massive 50% correction, and everyone, mainstream media, experts, etc., everyone thought that the bull market in gold was over. Then from August 1976 to January 1980, gold went up 8.5 times in price. 850%. So, in other words, $850. So if we look at the price today at roughly $1,300, 8.5 times of that would be $11,000. That's where he got that original $11,000 number from. But this is also not the 1970s. Government debt and money printing worldwide are much, much greater. And it will not be like 1980 to 2000 when it comes to the gold correction. We are not going to see a similar correction after gold reaches a peak in the next few years. At that time, gold will either be money, because people will not trust paper money, or gold will be some other part of the monetary system. Therefore, I don't expect to get more than just a slight correction after this massive gold rally that we will see in the next few years. But with regard to the short term, I still believe that gold and silver will rise to levels that few people can imagine. This is why people shouldn't worry about the short-term price. People are holding gold to protect their wealth, and they will need this protection in coming years. 34-year market veteran. Been there, done that, experienced it, saw it, recognized it, and sees it again. Except this time there's a whole lot more debt out there. And the prices of gold and silver now, as we all know, are absolutely manipulated downward. So at $20 silver, in fact that I don't think I've looked at the price of silver today at all. I say 20s, it's in the 19s. 1957 currently. It's a massive buy. It is a massive buy right now. And it's not like they're doing this to give you a little discount, like the powers that be are saying, hey, let's throw the people a bone. Give them a bone for once in their lives. No. They don't want you touching gold and silver. They want you thinking gold and silver is not money. It's not a store of value. It's not a store of your wealth. As soon as you get it, let's push the price down and hold it there for 2.5, 3 years. Let's just hold it down there until these people realize, man, that price ain't going nowhere. I'm out. I'm selling all I got. I waited 3 years. It hasn't moved. This is absurd. Nothing does that. I got to get out. But the highly, highly informed and intelligent people recognize what game is being played. And we're holding for the long run. And you should too. That's just more proof of it, what I just read you. Take care.